I recognize member for Carney Central.
Thank you very much, Mr. Deputy Speaker. The Minister of Housing emphasized the fact, like the Minister of Finance, that the bill was short. And he said that it was simple, and in some senses it is. But my colleague who spoke before me on this side, the member for Oropouche East, indicated very clearly that two of the clauses raise difficulties that require some challenge on our side and some consideration from the other side. The Minister of Housing talked about encouraging people to participate through the bond, and that is one of the reasons we support the bond, which is that we feel that it would be good to have widespread participation by ordinary citizens in the country in the bond offering. And he says basically that what they intend to focus on, Mr. Deputy Speaker, is on low and middle income housing. Now, if that were true, we would support the bond wholeheartedly. But it is precisely because the way the legislation is worded and because of the things left out, there is no guarantee of that we have some concerns about the 5 clauses in the bill. He talked about stalled projects of the last administration, the Kamla Prasad Bisesa administration, and the minister then, the member for Oropouche East. I think the member knows that projects do not start when you enter government, nor do they close when you leave government. And normally, if you are a working government, what is going to happen is that you're going to have a number of things completed, as we did in a number of areas, whether it is in health or in education or in road construction or whatever. But you'd also have a number of projects completed. All right, there was a time when the Minister of Housing was giving out, I think, keys to about 100 houses a week. But what it would mean also is that you would have projects that have not been completed, and whatever new government comes into office would continue those projects. I think that is the normal procedure. And I think that we ourselves, when we come into office at the next election, will have a number of projects to continue as well from the other side. So the other issues, I just want to correct one thing. My colleague, the member for Oropouche East, indicated to me that the River Runs Through project was a project that had in fact been initiated by his ministry at the time under the People's Partnership government. And in fact, the contracts were given out. Those contracts were taken back, that is to say they were canceled, and new contractors given. If I am wrong about this, it is based on information conveyed by the former Minister of Housing, and I can be corrected about it. I myself am simply reporting what I think to be the correct situation on that particular project, not other projects that would have been mentioned. Mr. Deputy Speaker, this is a short bill, it is true, but it does raise 4 important issues that have to do with national development. It raises the issue of the bond itself and the idea of bonds and what they are used for. It raises the issue of housing needs, but also housing policy in the country, and whether in fact the bonds being used are the appropriate means of furthering housing policy. It raises the issue of debt accumulation, because this raises the debt by $1 billion when the bond is going to be over. And it raises the question of the continuing role of the state. And I want to deal with those 4 issues. I will not be long on any of them, but I do want to raise the issues because they raise policy issues. And Mr. Deputy Speaker, that is the position, or that is the direction that I will take here. Now, this is the 3rd bond that will be used that will be issued on the local market by this government. The first bond was an asset-based bond which had to do with the CLICO assets, which were bundled and raised $4 billion. Then there was a 4-year bond issued earlier this year in February for about $500 million. And this is the 3rd bond now. It is for housing with a target of $1 billion. The original intended number by the Minister of Finance was stated as 1.5, but they have now agreed on $1 billion, we are told, and that has been set. Now, this bond was mentioned for the first time by the Minister of Finance during the midterm review last year, but the minister had in fact flagged the issue of housing before. He had raised the issue of the waiting lists and the number of houses that were demanded by how many citizens, etc. And then he took the opportunity to mention that he would come with this initiative in the midterm review. Now, when you offer a bond, it does liven up the market a little bit. And that does not mean, though, if you liven up the market, that the financial sector in Trinidad and Tobago is a rock of stability. Now, we have a strong financial sector in Trinidad and Tobago. I want to say that. I am not saying that the sector is weak. But I do want to say that one has to be aware and alert to what is happening in your economy as things evolve, both externally and internally. So if we take a look, for instance, at page 47 of the Financial Stability Report 2018 of the Central Bank, it focuses on 3 things: vulnerabilities, key triggers, and risks, and I will get to that. And when you take a look at the last article for IMF report, which comments on the financial sector, on page 16 of that Article 4 consultation report, the IMF says, and I quote from it, "An increasingly complex and interconnected financial system within and across borders, cross-border presence of banks and insurance companies, and gaps in the oversight framework for credit unions and mutual funds call for careful monitoring of systemic risks." So this is the IMF in April 2018, simply signaling that one has to be very cautious about how you manage the financial sector. And this is the central bank now in their report, which is very recent. It's this Financial Stability Report of 2018. I can't get the month here, but it's very recent. And they talk about vulnerabilities, and I would just mention them. On the vulnerability side, they talk about growing household indebtedness. They talk about high sovereign concentrations in the financial system. They talk about keeping pace with evolving international standards on money laundering, terrorist financing, and tax transparency, and rapid digitalization of the financial services industry. So they mention those as vulnerabilities. As key triggers, they mention sluggish domestic economic environment, increasing unemployment, rising interest rates on variable rate loans, sharp fall in government of the Republic of Trinidad and Tobago revenue, higher domestic interest rates, credit exposure limit adjustments, loss of correspondent banking relationship, and possibility of cyber attacks. And then on the risk, they talk about deterioration in the quality of consumer loan portfolios. That is basically happening now. Rise in public sector related non-performing loans, delays in executing international payments, and I might add local payments, loss of confidence in digital transformation. So whatever we are doing, we have to take into account the fact that you have a situation that needs some thoughtfulness, that needs some care, that needs some caution. And sometimes a government, can create the impression that economic activity is taking place. You could have road paving, or you could have road construction, or you could have housing construction as visible indicators that something is happening in the economy. And I hope that this is not the intention behind this particular bond. My colleague, the member for Oropuch, said that with this bond, they will collect the money, but they will not build a single house. I don't want to be so unkind, but I do want to say that I hope that the intention is in fact to build houses for all of these people who need it. Now, in the budget statement of 2019, the Minister of Finance identified 176,000 applicants. And he said these would be subjected, no, I think it was the budget of 2015, actually. That would be the 2016 budget. He identified 176,000 applicants and these would be subjected to due diligence and scrutiny in order to establish a reliable and creditable database. And he talked about innovative solutions, and he talked about supporting and increasing the role of the private sector. In that particular speech, and it was in fact in 2019, the budget of 2019, which had been in 2018, he alleges a $12 per square feet cost during the period 2011-2015, which by all the information that I can gather is not true. The cost ranged at that time from about $600 to about $850 per square foot, and he claimed that the price per square foot was brought down by his government to $600. But the contract which the 6 ministers were celebrating with the representatives of HDC, Mr. Deputy Speaker, and with representatives of the Gazuba Group International Engineering Company Limited of China, was a contract to build units at about $1,300 a square foot. And this is something that we need to take into account when the Minister of Housing comes here to talk about low-cost housing and building housing for those who need it, who are poor. Now, that contract with the Gazuba Group has been canceled. The question is the housing program still on, and is this the bond that is going to trigger it? The issue is also who is going to do it? Where are the 24 communities that the minister talked about located? And if the 24 communities remain, is the deadline still 2020 to finish all of this housing? And the reason I ask this is because we have to be careful that the bond is not used, especially as it is going to the HDC, to create the conditions for establishing a kind of private state contractocracy that is tied to the HDC and the $1 billion payout that would be possible from this if indeed the objective is to go for housing construction. And I raise that because it is important to raise it. Because, Mr. Deputy Speaker, we cannot be here as the Minister of Housing came and focus on the ordinary citizen who is trying to get a house, and we see that there are over 100,000 of them standing in line, so to speak, and using this bond as an opportunity to tie their ambitions, their aspirations to the housing market and the HDC. And while we are focusing on that, what is really going on in the background is the award of contracts to people who are specially or who have special relations with the HDC. And I want to flag that here, I want to raise it here, I want to raise it as an issue, because what it raises is the issue of the open tendering process, okay? So now, as far as housing goes, we have not seen a lot of housing construction done by this government. The minister mentioned a couple of thousand houses. I will not doubt him, but when I look at the state of unemployment, when I look at the cement sales in the country, I do not see a thriving construction market. And these are indicators which point to that. One of the first places in which unemployment is picked up is in construction, and one of the first indicators of construction taking place in a country is sales of cement. Now, where housing contracts have been given, Mr. Deputy Speaker, the issue of transparency does arise. We've had a situation where in the case of the Chinese contracts, two issues come up. One, it had to be canceled. Secondly, when the elements of the contract were made public in the press, they became very disturbing to the population. And the third thing is that in many of the construction that are taking place other than that particular contract, we don't know what is the process by which these contracts are done. Now, a case can be made that government's strategy for housing aligns with a political strategy as well. And I think that that is something I want to raise here because it is important, because this is public money. This is the money of citizens. And the intention is to build homes for people, citizens all over the country. And the intention must be social, in my view, and not political in intent. Now, some of the houses that have been given out, as the minister himself indicated, were houses started by us and finished by them, which is not unusual. That is the normal process for a government. And where new houses have been constructed, as in the case of Maruga, we have a situation such as the one raised by the honorable member for Siparia and leader of the opposition, which in fact raises questions about the original contracts entered to with these citizens. Secondly, the variation of costs. And thirdly, the issues of quality which she raises. So I think that those issues having to do with housing are important issues for us to address as a parliament, Mr. Deputy Speaker, and I hope that some member on the other side, if not the Minister of Finance, will respond on some of those issues. The other issue is the issue of debt. I said that one of the issues that arises here is the issue of debt. in the last 4 years, we've had an increase in the debt stock of about $23 billion. We are now at the highest level of debt that Trinidad and Tobago has ever been, about $100 billion. We are at the highest level of central bank overdraft that we have ever been, over $12 billion. We are at the highest level of the exchequer account in the central bank, which is over $40 billion. Now, what are the debt servicing requirements of the country now annually? I wish the Minister of Finance would tell me that in dollar terms and in percentage terms so we understand. And can we continue to increase debt and to service debt in the way that we are going in Trinidad and Tobago, even if we come to the Parliament and the country and say that the reasons are justified because we are addressing a social cause in the country? Okay? Because the debt issue is an issue on its own. It is an issue that is something that we need to consider for the health of the country. And I simply raise that because it is important to raise it, Mr. Deputy Speaker. Now, this particular housing bond for which we are legislating here today was prompted, the Minister said, by the success of the $4 billion asset-backed bond, which had to do with the shares associated with the Clico Assets ownership last year. And this pointed the way to a capital raising strategy. So this particular housing bond, the Minister claimed at that time, when in the midterm review, would release the HDC from its financial constraints, and he reinforced that here again today, which limited its ability to provide housing. But is this the best way to deal with an affordable housing need? Mr. Deputy Speaker, I'm raising that as a policy issue. The Minister talked as well about his government's self-imposed and prudent debt benchmark. This is what this is a direct quote from him in the midterm review presentation that he made before. So I want to ask, what is this self-imposed and prudent debt benchmark? What is it? Where is it written? How much is it? The limit, I mean. And how is prudence to be defined? Now, I do have the media review statement here of 2019, and I won't read it, but it is here that he announced that he will come with a bond in 5,000 investment units. And he talked about 6,000 units, 3,000 per annum, etc. And I have some reports as well, which reported on things that he said related to the announcement of this particular housing bonds. Now, this takes us to the actual bill itself and the 5 clauses, Mr. Deputy Speaker. And I do want to take a look at the clauses, okay? So clause 3 says the housing proceeds of the, notwithstanding section 2A, the proceeds of the sale of tax-free Housing Development Corporation housing bonds issued under this act shall be applied solely for the purpose of the purchase of houses from the Housing Development Corporation by individuals. Now, does that guarantee everybody who holds a bond an option for an HDC house, Mr. Deputy Speaker? Because I think it is possible to interpret this in various means, in different ways. Is it only for housing from the point of view of the individual investor who invests, or can it be for something else, simply as an investment instrument? But the more disturbing area is in Section 3 of the Act is amended in subsection 1 in the chapeau by inserting the word issue, after the word issue, the words transferable or, and therefore what that does is that it makes the bond transferable as well as non-transferable. And that opens the door to all kinds of interpretations and the reasons for it. And I want to flag that. I think it is important. The other issue here in C, by deleting all the words after the word by and substituting the word as may be specified by minister order, the way that is written, just as the way the one with the transfer of is written, it is very hard from reading the clauses to know the context or to know what it is about. But when you go to the parent bill, you realize in B, that's to say in 3(1)B of the bill, that clause says such other sums as may be from time to time specified by resolution passed by both houses of Parliament. And this is now changed, it's altered because it's now deleted to as may be specified by the minister by order. Now, Mr. Deputy Speaker, I think that my colleague flagged it, but this is a very serious matter. And it's a serious matter because I think the way that it is presented is also a problem. Because just so the minister, you move in this bill, just so they move 300 million to 2 billion and now to 3 billion. Okay, that's the first thing that they do. Well, that is okay. You're raising the amount that you can raise on the market. Okay, and you're doing it, we are seeing it clearly, so that's okay. But just so also is transferable and non-transferable introduced, and I wish the minister would give us an explanation of what exactly is transferable now to whom that was not transferable before. I really need to understand that. The minister may tell me that it's a simple thing and I don't understand, but for the sake of the population, the minister says he has to use marketing. He says he has to use education to inform the population. I would like to understand clearly what is going to be transferable that was not transferable before and by whom to whom. I need to understand that. And just so, with these words, with the stroke of a pen, the Minister of Finance has taken away the power of Parliament to scrutinize the motion before the House and to reside that power in the person of whoever is the Minister of Finance at the time. In this particular case, the current Minister of Finance. Now, I find that problematic, Mr. Deputy Speaker. All right? And I feel that there is some deception here. All right? Because by reading the amendments literally, you cannot get the clear and true intentions of the amendments. So that, in a way, it is very deceptively crafted. So I am saying that we are suspicious of why the bonds are now being made transferable. And depending on the explanation, if it is not satisfactory or does not allay our suspicion, we are certainly opposed to that. And we are very definitely and definitively opposed to the Minister of Finance simply usurping the power of Parliament just so. Now, it is difficult to say whether all individuals who subscribe will be allocated allocated housing. We need that clarified. What would happen to others on the priority list who do not subscribe to the bond? What is going to be the role of institutional investors who are going to come after the individuals who have subscribed a portion of the $1 billion? What is the intention with this bond? Is it for a secondary market? Is the idea to promote?
Member, your initial speaking time has elapsed. You have an additional 15. Care to avail?
I would like to
proceed.
Mr. Deputy Speaker. Is the idea to develop a secondary market, and whether, in fact, the original intentions of making housing available quickly and plentifully to large numbers of people who need it, affordable housing, whether that original intention is going to be defeated by the other things that are possible by the legislation here, in the creation of institutional investors and the creation of a secondary market. So, Mr. Deputy Speaker, the savings and investment aspect of the bond is good. We support that. The debt aspect of the bond is problematic. And I want to alert the country to that, and I want to flag that to the minister. And I want to... no, you can get up and speak if you wish.
Talk after.
You can get up and speak if you wish. The debt aspect of the bond is problematic. And the possibility of one or several institutional investors redeeming the bond and holding the government debt, I think, is a little troubling.
Correct.
And the policy issues around housing are also a little troubling. I have something here in which, oh gosh, you can get up and speak. You get a chance. What?
But again, there's a procedure. The member has not given way. So let's cease that discourse. Member, Kearney Central, again, address the chair.
Thank you. Thank you, Mr.
Thank you.
Deputy Speaker. I will do so. I have an article that was written by one of the securities company in which the writer of the article says investors continue to bemoan the lack of new public bond issues coming to market. Well, this will satisfy that if in fact there is a need, while secondary activity has also been subdued. So maybe it will also satisfy that secondary market need, Mr. Deputy Speaker. But I would like the Minister of Finance to indicate that, because what I am saying is that there may well be a contradiction between the original intention and what are the possibilities that are made possible by the legislation that we are now seeking to pass in the House. Now, there are all kinds of things going on in the world now, Mr. Deputy Speaker. And as you know, the crisis that we had here in 2008, 2009 was related to an external crisis outside. It had to do with a collapse of the financial market. The collapse of that financial market was based on a housing crisis. It was also based on the development of derivatives based on housing and real estate. And that ultimately, you had a triple whammy when the price of energy went down and the price of real estate, and real estate really crashed all over the world. That was 2008. There are some people who claim that that crisis that we faced in 2008, 2009 has not really been overcome yet, although people have sort of gotten back on their legs. They feel that the crisis has not really been abated, has not been solved. But the situation that we have now at this time, Mr. Deputy Speaker, is one in which people are talking about the possibility of a global recession again, in which there are trade wars, in which there are issues having to do with energy again in Saudi Arabia, in which Brexit, what is happening in Brexit threatens the whole fabric of that institution and happening in Europe. So that we are dealing with a situation where the world itself is also in turmoil. And as we do our business here, we cannot do our business as if, you know, we are isolated and alone and insulated, and that we are not alert to what is happening elsewhere. So I simply mentioned that, just as I mentioned before, that we need to be cautious about the strength and the resilience of the financial system in Trinidad and Tobago. So I mentioned this other one, the fact that we are dealing with the possibility of instability and recession, given all the things that are taking place. And I leave it there. I simply want to raise the matter because I think it is important to raise it. So I asked the question, what is government's housing policy? From the point of view of the Minister of Housing who spoke to it, he said basically the housing policy is to make affordable housing possible and to make it in greater numbers to people in the country. And the question I ask is this the only way to do this thing? How do they make housing available in the private sector market? They offer their properties for sale. Somebody makes a down payment. You might make a second down payment on it. That way the developer gets money in his hands, begins the development, whether it's homes or apartments. And during that time that the construction is taking place, a mortgage is being arranged. And at the end of the day, by the time the property is finished, the construction is over, the person has a mortgage, the banks have a mortgage, the person has property ownership and a place to live, and the person who is selling, the vendor, the property developer, has gotten their money, so that in a sense, everybody is happy in the process. Now, why do we want to do this for public housing as a bond? And why do we want that money in the bond, raised by the bond, to reside in the HDC? Okay? And why do we want the individual owner who is really paying for a house to pay in the bond to get an interest, okay? Whereas that person could be paying for a particular house in a particular place on a particular property, and within the 2 years or whatever that it takes to build the house, everything is arranged through home mortgage bank or whatever it is, you know, so that HDC gets its money, the property owner gets their money, get their house, sorry, and everything works out just as you would in a private sector transaction. Why are we taking this convoluted way? And I am raising this issue because I'm not sure that that is the right way to proceed. And therefore, I want to raise an issue that might be a little troublesome, which is the issue of, should the state continue to operate in the same way as it did in the days of the, was it NHA before HDC, NHA, the HDC, etc. I mean, they have already initiated the process of public-private. The state has a number of properties in various places that it owns. It doesn't have to divest itself of that. But wouldn't all of this be a lot more efficient and effective and stimulate the economy better if you had an open, transparent bidding process and you tell the people what is the price that you want to sell the homes for, and the developer would have to fit into that process and provide those homes so that everybody gets transparently what everybody needs. So the contractors can work, the individual homeowner gets his home, the efficiencies are built into the system. Why do we have to build this terrible state apparatus and continue it and fund it, and with all its effects? You talk about the fact that so many homes were abandoned over time, etc. Why do we have to do that? And it really raises the question, Mr. Deputy Speaker, of what is the role of the state? I mean, we have a situation in which we have to ask that question, given the financial situation of our country, given the difficulty of balancing budgets, given the difficulty of dealing with the debt situation and repaying it. Basically, 17.5% of our revenue, Mr. Deputy Speaker, is going to the repayment of debt servicing. It is going into debt servicing in this country. You know, and we have a serious problem. And Mr. Deputy Speaker, I think my colleague, the member for Oropuch East, said that they had not thought this thing through properly. And I really don't think, I think we have to begin thinking through what are the right strategies for the country in all of these policy areas, even while you acknowledge that there are inequities in the society that must be addressed, that there are needs in the society that must be addressed, and that there are social concerns in the society that must be addressed. But that does not mean that you have to have the state in the middle of everything. I think that it is possible to think through a regime that allows you to address this particular situation of housing need and of the need to save, both of which are commendable things. I commend the Minister of wanting to create a savings instrument. I commend the Minister in terms of wanting to make savings possible as moving towards a home. But we have other problems here, Mr. Deputy Speaker, and I don't think that the Minister, I don't think the bill, I don't know if what was the intention behind the bill, but I think there are contradictory possibilities once we pass these bills that will in fact undermine what is the original intent of this bill. And on the debt situation, I want to say that there is...
Remember, you have 2 more minutes.
Yeah, I want to say that there is a difference between official debt and the level of indebtedness of a state, Mr. Deputy Speaker. And I want to say that the level of indebtedness of the public sector in Trinidad and Tobago is way, way, way beyond $100 million. I wouldn't deal with that today, perhaps at the budget time, depending on what kind of budget the minister brings. We could address some of those things. But I want to say that given the debt situation in the country, given the difficulty of fiscal space in managing budgets and budgetary allocation and development needs in Trinidad and Tobago, I think that perhaps we have taken a wrong approach in bringing a bond to pass on the money to the HDC, for the HDC to give out contracts to people to build houses that are meant to be affordable housing for ordinary people, poor and middle income people. And I think that this is a mistake in policy in the manner in which it has been approached. Thank you very much.